You guys want to see my hedge fund impression? Here. Oh, these balls I need to juggle. Oh. Whoa. Hey, welcome back to the channel. Thanks you so much for checking out this content, which I have to remind you is my own opinion or someone else's opinion that I am doing due diligence on. I am a data scientist here in Silicon Valley. My name is Andrew, and I'm really pleased that you guys are joining, and I'm really pleased that you decided to smash this like button early for this juggling trick, as well as hitting that subscribe button if you're new here. I really appreciate you being here. Reminder, none of this is financial advice. Make sure to be responsible with your bets, because it's Wall Street bets, not Wall Street investments. Check out GameStop right now. It was originally up a couple of double digits after hours. If you haven't yet seen that live stream, go ahead and check it out. But right now I'm going to cover some due diligence from President Wolf that is about how there is no mathematical way shorts were covered for January 13th, 25th, with GME's 69.75 million outstanding shares. These are just general findings, and there's a ton more edits in the post itself, but I wanted to cover this information so that you guys have it, as well as providing you with the most up-to-date information. And I want you guys to comment. I want you guys to tell me if this is the information you're looking for, as well as if you want to see information about other stock tips, stipend updates, as well as other personal finance things. Go and comment that down below, and I respond to each of them. Please note that the below plots are all done with publicly available data from FINRA, January 29th text file, February 5th text file regarding short volumes and Yahoo Finance for daily volume and GME daily prices. I promise you this long video is going to be worth it, but the too long didn't read version is at the bottom in figure 9. I'm going to show that in a second. Figure 1. Below is just a plot of daily stock prices at the open and close of trading during regular hours for GME. The source is Yahoo Finance. We see here that there are open and close prices. The open is going to be the blue dots and the red is going to be the closes. So as everyone knows, shorts can cause the price to rise in a given stock as a share of stock must be purchased, and with supply and demand, we aim for the heavens. Which leads us to figure 2. Shorts and short exempts. Note the y-axis is in millions as reported in FINRA during regular business hours. So we know here that regular short volume in red is the majority of what we're looking at in terms of the shorts reported during regular business hours for GME specifically. Let's do a quick sanity check. Looking at figure 2, we see that January 13th, over 40 million shorts were executed. So if we check the figure 1 on January 13th, we should expect to see that the price increased, which it did. Let's look at it on a different day and plot the closing price minus the opening price to see just how GME stock changed each day. Overall change in stock price from open to close of GME. The plot seems to be dominated by the wild changes in price during late January, early February. So let's do a normalization trick by taking the above values and dividing them by their respective opening price that day, which is going to be in this figure, figure 4. Now in figure 4, we see the GME price change relative to the opening price that day. Again, we see that January 13th, there was an increase by over 50% that day. So let's make it easier for everyone and combine figure 2 and figure 5 to see both the total number of shorts executed and the price change for the same day. Boom. Now we have a plot. Here we see both the change in price and the number of shorts being executed for a single day. So what do we actually get from figure 5? January 13th keeps within the hypothesis that more shorts means more gains, but we don't see that across the board. January 13th, January 22nd, January 26th, and February 5th all show gains in price and large numbers of shorts. 22 days tracked, and 11 of those days have over 10 million shorts during regular business hours, but only 4 days have gains of 20% or greater, and only 3 of those days have gains over 50%. This is the crux of the question. Why hasn't GME reached the moon with the rocket shorts fuel yet? Everyone cries from Wall Street Bets. All the apes, the ape nation is crying that question out. Okay, deep breath. Well, maybe we should also compare the overall volume of GME as well, not just the shorts. The hype was and is real over GME, and the world took notice. So let's see how volume changed with it. First, let's plot our daily volume during regular business hours again, figure 6A, let's say. All right, what do we get out of this plot? Well, from January 13th and onward, the volume shot through the roof compared to early January. But wait just a second. I didn't hear about the GME hype till late January. From what I can find Googling, it seems that most major news outlets didn't really report on Wall Street Bets and GME until January 21st, with serious mentions coming around the January 24th weekend. This is a general assumption that we're making. Most of the actual retail investors didn't join GME until the weekend after January 22nd. So we have updated figure 6B, let's call it. This is the daily volume as reported by Yahoo Finance for GME. And remember, note that 6A, the one we just saw, is contained within 6B. So assuming the above, let's say the higher volume after January 25th is from Urist McLoss's money. So what's with that crazy high volume from before then? Is it from the insiders, the true chosen among us, the users in Wall Street Bets that aren't bots? No. Almost certainly, volume before January 22nd is from the hedge funds having to buy up the shorts that they way overextended on. The big boys had to join us bottom feeders and buy up the stock to cover up 9,000% short shares. Maybe. Anyway, we can check something else to shine some light into what's happening during the dark hours of trading, after hours volume. So figure 7. Here are the regular hours trading compared against after hours trading for GME. So we love plots here, we really do. Here, we've taken the regular hours volume, again from FINRA, and subtracted it from the day's total volume as reported by Yahoo Finance to get the after hours volume. Okay, but again, what stands out and what is the point of this plot? After hours volume overtakes regular hours volume January 22nd and has remained where most of the action is going on. Generally, retail investors can't engage in after hours trading. And also, don't confuse what you do on your trading app at 2 a.m. with what broker deals and big boys are doing at 2 a.m. We see around January 13th, after hour volume went above 50 million. So my general guess is because hedge funds needed to buy shares to cover shorts and the following days thereafter. So let's take a step back and look at shorts again. Figure 8 is going to show us that over half of all volume just during regular hours are shorts. I don't know if there are numbers out there that shows after hours shorts, so please, if you know about this, please comment down below. And because I can't get after hours short volume, we have to make a wild guess as to this next step. So multiply figure 8 by figure 6B and you get figure 9. Estimated the full daily short volume by multiplying the regular hours short ratio from figure 8 by the whole daily volume reported by Yahoo Finance. Remember, this is an estimate, but it's a lowball estimate. Assumption. Let's assume that after hours volume plays like regular hours trading. I still highly doubt that and wouldn't be surprised if after hours volume was higher than 75% of just shorts. So let's roll with figure 9. Looking at January 13th, we estimate the number of shorts executed was over 76 million, and there was 69.75 million shares outstanding. Okay, that checks out. So too long didn't read. Look at this figure right here. Note that it's an estimate and it's a low one, and see how it's impossible that they covered their shorts on those days specifically. Not financial advice, not legal advice, just some math that this Redditor decided to do, and I'm hoping to spread the news along with you. Make sure to do your own due diligence. Make sure to smash that like button if you enjoyed this content. Make sure to comment down below if it didn't make full sense. I want to talk to you guys, respond to your comments, as well as respond to any business inquiries that you have. Make sure to use dataleaptech@gmail.com. That is my email that you can directly talk to me if you wanted to talk about one-on-one mentoring, either in personal finance or in data science, in which I am a mentor and a coach, as well as the idea that you and we are in it together. So go ahead and follow me on the different social medias, Twitter, Instagram, and TikTok, and make sure that you check out one of the links down below, especially the Webull one that will get you 2 free stocks, and that is a pretty good deal because one of the stocks could be a GME or an AMC of who knows, it could be up to $1,600. As always, I appreciate you guys. Stay safe out there. Don't make any bets that you can't comfortably make, and share this video if you want more people to understand exactly what is happening with this shenaniganry from the hedge funds and institutions of the world. As always, my name is Andrew. Thanks for watching, and I'll see you guys next time. Peace.